10 minutes for questions. I'm going to start it out. There's been a lot of talk over the last several years about taxing internet purchases. A lot of people feel like we're leaving a lot of revenue on the table. Two questions. Is it good policy to tax internet purchases or even catalog purchases where there isn't a nexus in the state of the Quill decision? And then secondly, if it is a good policy, is the streamlined sales tax the right way to go about it?
Issues of nexus are basically issues of when does an individual or a business have to pay tax in a state. On the flip side, when does a state have a right to impose its taxing jurisdiction on an individual or a company? This is huge because of the 21st century economy, the impact that the internet has had on the way we do business, the fact that a company can produce locally and sell globally now, has in many cases exposed companies and individuals to tax burdens in places that they don't live, that they don't work, that they don't send their kids to, they don't vote, they don't impact the debate. And so we have to get this nexus question right, not just on the sales tax, but on business taxes too. It's a huge question. We like tax competition, right? What does a business want? Well, business obviously wants as low a tax burden as possible, but they also want services. You want good roads to ship your products on. You want a decent labor force, a decently educated labor force, though on the state level, as Jonathan mentioned, you can go anywhere when you graduate from school now and work. And so there is no guarantee that your well-educated kids are going to stay in your state and use their education in your state. But the bottom line is that businesses, they want low taxes, but they also want decent services for their products. Okay? So tax competition is good because it keeps the tension between those two. It forces states to deliver services in the most efficient manner possible. If not, you're going to, next time you're opening a plant, you might put it somewhere else. Okay? And so we think the best way to keep tax competition going is to have some type of physical presence rule where you have to be physically present in a jurisdiction before you have to pay a tax, before you have to collect a tax, etc. Now that said, that's often cold comfort for the Walmarts of the world because they're physically present everywhere. They have to collect sales taxes everywhere, no matter whether they're selling it locally or through their internet or catalog system. Okay, so for Walmart, states getting together and streamlining their sales tax bases is a good thing because it reduces their compliance costs, right? So there has to be some type of compromise, I think, where the companies who are located everywhere can get a more streamlined system. But we can still allow people to shop wherever they want and not have to face the tax man when they get home. I think many states now try to get you on the income tax return, which is basically creating a nation of tax cheats who conveniently forget all the purchases they made on Amazon.com when they file their income tax returns. So I'm sympathetic to the streamlining, the actual streamlining part of the streamlined sales tax project. I'm unsympathetic to forcing companies to collect everywhere they sell because it's not good for tax competition. Yes, sir.
I want to take advantage of the fact that a number of our state legislatures are here, and now I see where the whole tax system can be under review in the state and so forth. So as a World War II decorated veteran, 79 years old, with 11 grandkids, a son who was down in working on a master's with a huge education bill to pay and so forth. Here I am at 79. I just have received a $250,000 assessment increase on my well-live, and which runs the school tax up to over $6,000 a year. So why at 79 with 11 grandkids am I still having to be burdened with this school tax? My kids went through grade 11 Christian because at the time there was a thing to do and so forth. So here I am, still at 79 years young, still having to be burdened with a horrendous school tax. I would like to have a little relief from this, if possible. So gentlemen, y'all who come here under the Gold Dome, I hope that you could, you're listening, I know you are. So that's my concern, and I think it's a legitimate concern. So that's my statement. It's not a question. It's just taking advantage of the folks being here. Hopefully we'll get some relief. Thank you.
Yes, sir.
When you look at such things like the ad valorem taxes, property taxes,
Our index just looks at whether you have an inventory tax or not. And as you said, Georgia does. No other southeastern state does. In fact, that's a tax. That's another piece of low-hanging fruit that we forgot to put in our presentation. Is that states are moving away from that tax. It's a kick them while they're down kind of tax. The more your inventory piles up, I mean, in bad times your inventory tends to pile up more, and then your tax burden, your inventory tax base is basically increasing, while your sales and your profits are decreasing. Yeah, and I love doing this stuff. You don't have to pay me. But no, it's definitely something that should be looked at as part of any tax reform here. Yes, sir.
How successful is fundamental tax reform if it isn't paired with fundamental spending reform? It seems to me that you'll just fundamentally reform in a few more years when somebody wants to set aside either on the taxing forgiveness or on the spending project. You don't know what the if I don't know the taxpayer, then you won't come up with another idea to decide on. Sooner or later, you're going to find another taxpayer, you know?
Well, I guess I would answer your question yes and no. I mean, it's important. Yes, it's important to look at spending when dealing with any tax issue. But no, fundamental tax reform doesn't always have to be tied to spending reform. Fundamental tax reform can just merely be a revenue-neutral exercise in cleaning out the tax system, making it have fewer compliance costs, reducing the distortions caused by the tax code. And you haven't changed the amount of revenue you're generating, although big caveat here, the revenue-neutral forecasts are rarely accurate. Again, as our Coca-Cola friends will tell you about their experience with Texas margins tax. But so you don't have to pair it with spending reform. However, you can't ever lose sight of the fact that we don't raise taxes because we enjoy raising taxes. You know, we raise taxes to spend on necessary government programs. And the best, from a polity perspective, from an aspect of how do we govern ourselves most effectively, I think the best way to think about it is what do we want to spend money on? And then once we've agreed that we want to spend money on this system, then let's raise the tax revenue in the most efficient way possible from the people to get that done.
What are the top 3 states that have the best tax structures, and what do they have in common that we should emulate?
Well, it really goes beyond the top 3. It's the top 10 go without a major tax in their structure. And that makes them more competitive in our minds than the other 40. And the top 3 are, help me, Jonathan, South Dakota, Wyoming, and no, I don't think Alaska's up there. But Florida is up there. Tennessee, surprisingly, and Tennessee is Tennessee is not in our top 10, believe it or not, because their sales tax, when you combine the state and the local rates, is like over 10.5%. And that's sort of a case study in how not to go without one of your major taxes. They're putting probably too much stress on their sales tax there. And really what that means is they're not, as this gentleman just said, they're not keeping a focus on their spending. You know, really, if you're going to go without a major tax, you are going to have to look at your spending and efforts to keep your spending down. Yes, sir.
Related to spending question, I'm trying to think of a metaphor. If I buy an airplane ticket, I would definitely, if the airline was free, select that airline. I'd really go, but if I found out they spent no money on safety, I'm probably not going to fly on it.
Right.
Be done on the other side, on the spending side, to say, here are best practices of what's a relative low mistake to spend, whether it be on what you would consider the basics, education, infrastructure, so we can figure out, is the state spending it effectively, and is it spending it within benchmarks, or is it raising a lot of money that people might consider frittles away? How do you get to the other side of that equation?
We haven't yet looked at the other side of that coin, specifically in studies, but we're starting to put our toe in that water. We're working on a very exciting project right now that's going to compare the tax burden and who it's extracted from with the spending that government does and who it benefits. And so we're starting to look at some of those issues. I'm doing a project on education spending that's going to show how much more states are having to spend as a result of court rulings on education finance. So we're starting to look at spending. We haven't done anything like what you've suggested, but I would say again, in terms of business development and where businesses are going to locate, they're not going to locate someplace where they're not going to get the services they need. Because if they do, they're not going to be in business very long. So businesses themselves have an incentive to not let states race to the bottom and provide nothing.
Last question.
Where do you all come down on the idea of incentives, tax incentives and credits and things and
Oh, Kuno. Well, let's start with our view on tax incentives. Tax incentives are not neutral. The investment tax credit that Jonathan used in his example treats people who invest in capital better than people who invest in labor. We think the better tax system is just broad-based, low rate. They create distortions in the economy. It makes some activities more, it raises the after-tax rate of return on some investments more than others. And so investment's going to flow to that merely because the government created an incentive for that activity. So we are against incentives from a policy perspective. However, you mentioned Kuno. That was a Sixth Circuit case 2-3 years ago that basically ruled that tax incentives were unconstitutional because a business might locate somewhere that has an incentive as opposed to some other state. It would have basically been a judicial outlawing of tax competition altogether, which is why we filed 2 briefs in the U.S. Supreme Court opposing it, not because we love tax incentives, but because we like the idea of tax competition, but we like it on rates with a broad base.
Thank you very much.
Thank you. Thank you.